Hey, quads. Hope y'all are doing well. I'm been enjoying this day and this week. Man, it's been a good one. Got a lot of great workouts in at the gym, getting ready for the holidays. So I'm feeling sore today, which is nice. If you like that kind of thing. But I wanted to mention something because I've talked briefly about Elliott Wave, but it's not something that I really go into much. But I do want to point out this book, Harmonic Elliott Wave: The Case for Modification of Elliott Wave Impulse Wave Structure. And so the thesis of this book is that if you're familiar with Elliott Wave will generally have impulse waves involved, and so that's where you'll see oftentimes people calling out the one, the 1, 2, 3, 4, 5 waves if it's an impulsive wave structure. This book argues that all cases of impulse waves can be simplified down to ABC patterns, which would be 1, 2. Well, they call it ABC, but instead of having a 1, 2, 3, 4, 5, 1, 2, 3, 4, 5 structure, you would just have like your A, B, C structure. And so you're only going to have 3 legs instead of 5 legs. And if you're anybody who's interested in Elliott Wave or has briefly studied Elliott Wave, if you want to go into it in a little bit more detail and take maybe a simplified view of it, I, as an engineer, love to simplify things where possible. There is a developer, creator out there. I want to say his name is John. I'm probably getting it wrong. He's the creator of Java, I believe, and it's John Hickey. One of the things that he had a speech a few years back, probably around 2012, where he had mentioned something that simple is not easy. And so that basically encapsulates the idea of when you use something simple or you develop something simple, that doesn't mean that it was easy to do. In fact, creating simple things generally are a lot more difficult than creating things that are maybe hard to use, or if you would consider it like a brute force method. So I like this concept of being able to simplify the Elliott wave structures down to only ABC structures. And so it doesn't matter if you're looking at an impulsive wave structure or a corrective wave structure, they all boil down to ABCs. And so this book is rather expensive depending on your situation. It's like $50 if you get it off of Amazon, which at the time when I first found out about this book and wanted to buy it, I thought $50 was pretty expensive, and I believe it comes in a hard copy as well. So I will mention that you can purchase this book through Google Books, I believe for much cheaper. At the time, I think I was able to get it for like $10. And so you have a digital version of it through Google Books, which, to be fair, I don't actually like using Google Books. I don't think it's the best medium for consuming books, but I do like Kindle books. I read a lot of fantasy books at night to kind of take my mind off of all these other things that are more real, and it helps me fall asleep. So I do like that medium, although when I'm looking at technical books, I do sometimes like to have the paperback book. You can see behind me I have a few books back there that I've got the paperback versions of, because it's a little bit nicer to have those if you have some charts and things like that in it. So anyways, I just wanted to throw that out there. There's some different topics that I'm going to go over today that I'll kind of incorporate this concept. However, it's not going to be some kind of a class or anything like that on the ABC patterns. A lot of people do Elliott Wave stuff. Maybe at some point I'll put something together that's a little bit more formal in that sense, but I'm certainly no pro at Elliott Wave myself. And so I feel like there's probably better content out there than what I would probably put together, other than people who just might be interested in hearing me talk about it. So let's get into the Bitcoin price action today. I will say this sideways action just, man, feels so painful. Every time we get a little bit of a leg up, like broke 90,000 a few days ago, and then it just gets punched back down. We had the interest rate decision yesterday, I believe it was, and it looked like we might have got some movement off of that, and then people just started second guessing it, I guess. Coming up with other ideas of why that might actually be bearish in the long run. And so seeing this candle just kind of eat any gains that it had originally had from the interest rate drop. You could also say it was just people selling the news. And so maybe that was also the case. So nothing really new happening here. I will mention a couple of things because I've heard people calling this bear flag pattern. So if you're calling this a bear flag, I think what you might be doing is taking it from, I'm just going to go from the close here. So you go from close to close. And so if that were to play out, these are calling out for some nasty downsides, right? So if I take that, come here, let me grab you. And then I put it, I think where it has to be where the flag breaks out. So I believe you would have it about right here. And so this is looking at about 68,000 or so. Another potential negative thing that I'm seeing here, and I want to make sure that I take a step back and look at the possible negative scenarios, because as I mentioned, I am long biased. And so because that's the case, I know that I will have a tendency to favor positive price action over negative price action if I can. And so I try to break that by looking at some of the negative sentiment or negative possibilities here. So the other thing negative here is there looks like this could turn into a double top. And so if that were a double top, we'd need confirmation of this breaking below this previous support. And if we get that, we're looking closer to 74,000. So both of these are percentage-wise not really that far down. Let's go ahead and take a measurement on that, right? So if I grab this, we could be looking at, oh, is this not gonna, there we go. It's because I need to hold down control. So got the magnet on there. So it looks like 14% or 22%. So that's nothing to sneeze at for sure. But it's also in the, considering we've already lost quite a bit as it is. I keep going a little too far over there. We're already down 32%. So if we get all the way down here, that's going to be about 45%. If we come down here, 40%. So, I did go over using some Fibonacci's potential targets that could take us down a little bit farther than that. But all that to say, those could be lining up with potentially a bottom. I think it could take longer. Even if we do see that bottom, I think we would see a long time. We'd see price go sideways for a long time before we actually made a decision about whether price is actually going to go up. So being long biased and not having seen a nice touch of the 200s based on the trend strategy that I like to use, especially when I'm doing like just basic analysis or discretionary trading. We haven't got the touch of the 200s yet, so I'm still favoring some kind of counter trend play here that allows us to get up to these 200s from a technical perspective. If I look over here, something that could be confirming that bias is this potential curve up on the MACD, and if we can get a turnaround on the stochastics, it looks like I've talked a few times about whether we would consider this bullish divergence or not. Of that does not exist on the stochastics. Statistically, the most favorable conditions are when those both tend to line up. So, but I also did mention that you could, some people call these divergences when they're just essentially pulling out double bottoms. And so that's another thing we could see here is actually just even though this looks like a double top potentially up here, it could also turn into a double bottom. So going back to this ABC concept, I coded a strategy a while back using the Gann swing indicator where it was trying to capture this ABC idea. And so it was a little more simple and it didn't necessarily grab every ABC pattern here. But to do this, actually what I want to do is I want to jump onto the weekly time frame here. And so on the weekly time frame, one thing that you could look at is seeing this, let's just call this bottom here. So we're looking about, this is April 25. So A, B, and C, and these would all kind of be just joined together. But the point about this is once you get this top, you don't know that this is going to be the top. And so what you do to try and capture as much gain as you can once it's ridden up, as opposed to, I say capture as much gain as you want for a counter trend play. So this would actually be, if you want to go short in this context, and it actually, the strategy actually plays both sides. So I'll go over some other cases where this potentially could be played to the long side as well. But the idea would be, if you see this support right here, let me undo that. Hitting all the buttons now. So here, so I have this right here. And so the idea is, once this top is broken, if it doesn't hold, which it didn't, and it breaks right back down below, then this is where you set your short. And so this would be a strategy that I did code this in a strategy. I haven't looked at it in probably over a year. So it didn't actually pan out the way that I wanted it to statistically. So it's not something I was trading, but I've seen some people call out trading this successfully. And so one thing I will say about this particular strategy is that it has a very low hit rate, like 20. If you hit 20%, that's like a high hit rate for this particular strategy. But the idea is, when it wins, it wins like 10, like a 10R or risk reward ratio. And so you're just winning way more than you're losing. And so what you end up doing here is you would be trailing this. So I realize that this candle is already closed here, but when this candle first pierced above this first swing top here, you would immediately set an entry to go short if price dropped down below there. And so once price drops down below, you would have been short from here, and then your stop is just going to be right above there. And so you want to give it a little bit of room, of course. And so one of the things that I will say with this is, you can miss this just over and over again. And so my thought was that this would be a really good strategy to automate, because it has a very high win rate and a very, not a high win rate. It has a very low success rate. However, you're winning, the amount that you win when you win is much larger than the amount that you lose. So just as an example here, of course, you'd need to go through and kind of test this out yourself and see where everything lines up. But, you know, if you enter, you're talking about 1% here. And then there's no particular target on this one. So if you wanted to take it farther, you could play with ideas like, okay, once it breaks this, I want to go ahead and take some off the top. You might want to just do it based on percentage based. I'll have to go back and look at how much of that I actually included in the strategy that I built a while ago to test this out. But the idea is here, if I would have entered here and just wrote it down to this last swing low, it would have been a 10%. So you're basically risking a 1.5% for 9.5% gain. So that's not a 10R there, but it's pretty close to 10R. And if you look at some of these other ones, I'm sure they would definitely be 10R. So that is kind of in conjunction with the concept of the ABC strategy that I was mentioning, or the Elliott waves in the context of ABC. So if you're doing this as a discretionary trade, the idea is kind of to pick out where you think the top is. Well, I wouldn't say pick out where the top is. What you're trying to do is you're trying to go short at the top or go long at the bottom. And of course, you don't know where that is. So this just gives you a statistical way to try to catch a falling knife. But you're putting very small amount of risk on that, because as you can see, you would just put your stop loss just below where you had entered from where the previous high or low was. And so you have a very small amount of risk for potential large upside. So how would you trade this on the long side? It's basically the same concept. So if I grab this and I pull it down here, we have another potential setup that's similar to this, where we had this low here and then it came up. We broke this low. We pierced it, but we did not close below. We did not close. We did not continue going lower. And so again, once we pierced this previous low, we would set a limit order to enter if price ended up closing or going past back in the long direction above this support line. And so in this context, you would have got in here, your risk. Let's just go ahead and measure that out. Why did I do that way? So you would have been risking about 3% here. So again, it's going to be variable depending on how this plays. But And if you were going all the way up to the top here, that's 15%. So you're looking at about a 3R there. But as I mentioned, you could have took some off the top and left it on and just let this thing keep running. And if you didn't close it until we had this next previous close, I mean, that was 60%, right? So your risk to reward right there is much higher. Now, again, this isn't prescriptive in the sense that it's saying you're going for a risk to reward that is this particular value, right? So I just want to share this idea and this strategy with you because it's something that has been the concept is interesting to me. As I mentioned, I did code a strategy with this before. Interestingly, I believe what I had to do with the strategy, because these were the swings on these were too reactive, and so I was getting too many entries and pretty much no wins, and it wasn't really capturing what visually looked like ABCs to me. And so what I ended up doing here was I ended up going like a 3 or 5 bar on this. And then by doing that, I think I might have been on the daily chart. Again, I'm just going to zoom out here. So now this, and so just throwing this out here right now, like this A, B, C looks much more like an ABC to me, right? And then you could have potentially played this one right here. And so that was how I ended up coding that strategy, was using like a 5 bar on the Gann swing indicator. I have seen other people just try to code in directly how to detect ABCs. When I first got into doing Gann and I built this indicator, I was interested I kind of noticed that there was a potential to do something that would potentially easily capture ABC patterns, even though it was not intentionally geared strictly for that. And so that's why I used it to kind of test out those ideas. So anyways, just want to share that one with everybody. I think it's an interesting concept. It'd be cool to hear anybody's comments on it if they play with that anymore. After I finish this, I think I'm going to probably try to do some gaming, and we'll do a little gaming stream. I have been doing it off the grid. Those games are nice because they're short, but I haven't really been having that much fun playing that game, even though I haven't played it that much. I might try some Destiny 2, which is one of my favorite games in the past, which I haven't played in a long time, so I'll probably still get crushed. But if I could get that game booted up, I might play that one. If not, then I'll probably just jump on and do some off the grid and see how that goes. Hope everyone has good holidays. I am not sure how much I will be doing over next week, since we'll have the holiday and we'll be hosting, so we'll have a whole bunch of family in the house. But if I can get some quiet time, then I'll probably go ahead and throw up some videos. But if not, I hope everyone has happy holidays, Merry Christmas, and we will catch you on the next one. Peace, quants.